We encourage our clients to be generous with their resources in the community, and there are a number of good ways for you to donate to charity that also not only do good, but save you on taxes. The first way that we suggest is to give appreciated securities. Well, what does that mean? Your investment accounts may have gained in their value over your lifetime, and if you give shares of stocks or mutual funds directly to a charity, you can avoid having to pay the capital gains tax that's due in that account. The charity gets a donation, and you can avoid a tax burden. Second, many of our clients use what are called QCDs, qualified charitable distributions, from their IRA. If you're 70 and a half and have an IRA, you can give money directly from that IRA to a charity and avoid the income taxes that would normally be due for the IRA distributions. Finally, some of our clients find that a donor-advised fund is something that they want to set up. This is really useful if you have a lump of money that you need to find a good use for, and you really want to make sure that you can give to charities over a longer period of time. You get a big upfront tax deduction, and you can help those charities over a number of years while providing yourself with that tax break. Consider reaching out if you have more questions about charitable giving. We think it's an excellent way that you can use your investment accounts to help other people.